Hello and welcome from Trend Signal for our review of the data and events the week beginning the 28th of April. Markets, a bit of a mixed week last week. In fact, the last couple of weeks have been holiday shortened weeks, which really can affect the markets and it can reduce the liquidity in the remaining work days. Equities seemed to be running pretty well last week until Friday, which saw the US indices wipe out all their week's gains just in one day. Currencies, Western currencies, really sort of continuing to trend sideways, really looking for direction. Sterling is banging up against resistance on the weekly chart at 68.40 and is meeting a lot of selling in on any attempt to push through. Although on Monday morning, as this has been recorded, we note that news on AstraZeneca and this pharmacy deal that goes ahead, that will potentially impact sterling, and I think that's one of the reasons why sterling is quite a bit strong. And I think rumours of a better than expected GDP data tomorrow in the UK. So let's have a look at the data and events coming out this week. It's a busy calendar week, being the first Friday of the new month. We've got a new month starting on Thursday. It's a non-farm payroll week in the US, but we also have FOMC interest rate news and announcements on Wednesday. So it is a busy week. Let's just kick off now with Monday. We got the pending home sales. We had some home sales last week that were a little bit disappointing, which did cause a bit of a ripple in the market, certainly amongst the house builders. So they'll be keen just to see exactly what the pending home sales are like. We then have the prelim GDP data I've already mentioned that is giving sterling, I think, partially responsible for giving sterling a lift. Rumours in the press over the weekend that the data could be quite strong. Obviously, that won't be good for interest rate outlook, but it probably will be quite positive for the stock market. So bad for bonds, bad for gilts, and quite positive for sterling and equities. We then have the consumer confidence number from the conference board. We had the revision from the University of Michigan consumer confidence numbers on Friday, which were revised up. And so the US consumer remains fairly confident, if not getting more confident, which is positive for equities. We then jump to Wednesday, which is important day. We have the inflation data from the Eurozone, which is due to tick up from the rather depressing 0.5%, looking for a 0.8% number. Anything weaker than that could prompt more comment from Draghi, although I think the markets have got bored listening to Draghi say things, I think, well, they want a bit of action there. So until the ECB does something, I think the markets will not believe it for now. We then have the first insight into the non-farm payroll data on Friday with the release of the private sector payroll facilities company ADP and their take on the non-farm employment change. 203,000. The numbers are notoriously volatile from ADP, but it tends to give a fairly good insight. We are looking for better numbers in April in comparison to March. There are rumours of higher numbers than that, 225, 230. We then jump to Wednesday evening, where we have the FOMC statement, the Federal Open Market Committee statement. They're the rate setting committee of the Federal Reserve, the US central bank. Comments regarding or news regarding the tapering of the quantitative easing. We expect that to be tapered further, and any insight perhaps into when interest rates might rise. I think we're expecting it to be brought forward. At least that's what the markets are reckoning. We then have manufacturing PMIs, and in fact quite a few coming out. The first one is overnight on Thursday, Wednesday night, Thursday morning, manufacturing PMI in China. We have it here in the UK, and we also have the ISM manufacturing data in the US out at 3 o'clock. We also have Janet Yellen, the chair of the Fed, speaking at 1:30. I'm not sure it's a particularly important event, but there's always the likelihood or possibility that she could reference the tapering of QE and any interest rate views from the Federal Reserve. Weekly unemployment claims obviously overshadowed by what's happening on Friday, which is non-farm employment or the employment data. They call it non-farm. They exclude the more volatile and seasonal farming sector. We're looking for a rise of 207,000. Still not particularly headline grabbing. Nevertheless, it is an improvement, a gradual improvement. And the actual unemployment rate is less relevant these days because of the shift in the number of people actually looking for job or exiting the workforce. That tends to sort of cause it to be affected more by that than actual people being employed. So the key thing will be that data Friday, very important number at 1:30. Watch out for revisions as well. They'll announce the headline rate and then they'll revise the previous month's sort of February, March could then have revisions. So also obviously the impact will be the sort of the total release, as it were. That's it for data and events this week. Good luck with your trading, and we will reconvene again on Thursday at 8 o'clock. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.